The IRS just got a lot smarter. In 2026, the IRS is using artificial intelligence to automatically scan tax returns and flag freelancers and self-employed workers for audit. No human reviewer needed. The system compares your return against millions of others in your income bracket. And if something looks off, you get a letter. The good news is the system flags the same red flags every single time. In the next 10 minutes, I'm going to walk you through all 7 of them so you can check your own return before the IRS does. This is Clause and Coin, legal moves that protect your money, explained in plain English. Here's what most freelancers don't understand about IRS audits. An audit doesn't mean you did something illegal, it means your return triggered an automated flag, and the IRS wants documentation. Most audits are resolved by mail. You send the documents, they close the case. But the process takes months, costs you time, and in some cases results in penalties and back taxes you weren't expecting. The IRS audits roughly 0.4% of all individual returns, but that number jumps significantly for self-employed filers with Schedule C income. Why? Because Schedule C is where the IRS knows most errors and exaggerations happen, intentional or not. And now with AI scanning every return automatically, the old strategy of "I'll deal with it if it happens" no longer works. The system catches inconsistencies that used to slip through. Here are the 7 red flags that trigger it. Red flag number 1, claiming unusually high deductions for your income level. The IRS AI compares your deductions to everyone else in your income bracket. If you made $60,000 and claimed $45,000 in business expenses, that ratio is an immediate flag. The system doesn't know if your expenses are legitimate. It just knows they're statistically unusual. The fix: your deductions should be proportional to your income. If you have high legitimate expenses, document everything and keep receipts. The documentation is your defense. Red flag number 2, reporting a business loss for multiple years in a row. The IRS has a rule called the hobby loss rule. If your business shows a loss for 3 or more years out of 5, the IRS may classify it as a hobby. And hobby expenses are not deductible. The fix: if your business is genuinely losing money, document your business plan, your marketing efforts, and your intent to make a profit. That documentation is what separates a legitimate business from a hobby in the eyes of the IRS. Red flag number 3, home office deduction that doesn't add up. We covered the home office deduction in detail last week. The AI specifically looks for home office claims that are disproportionate to income or that don't match the property records the IRS has access to. The fix: use the regular method with accurate square footage. Never claim more than the actual percentage of your home used exclusively for business. Red flag number 4, vehicle expenses claimed at 100%. Claiming that a vehicle is used 100% for business is one of the most common audit triggers for freelancers. The IRS knows that most people use their car for personal trips too, and the AI flags 100% business use as statistically improbable unless you have a dedicated business vehicle. The fix: keep a mileage log. Document every business trip with the date, destination, and business purpose. Apps like MileIQ do this automatically. The standard mileage rate for 2026 is 70 cents per mile. Use it or use actual expenses, but document either way. Red flag number 5, inconsistent income reporting. The IRS receives 1099s from every company that paid you more than $600. The AI cross-references those 1099s against your reported income. If a client sent you a 1099 for $15,000 and you reported $12,000 from that client, that's a $3,000 discrepancy the system will catch automatically. The fix: collect all your 1099s before filing and make sure your reported income matches or exceeds what was reported to the IRS. If there's a legitimate discrepancy, a return payment, a correction, document it. Red flag number 6, large cash transactions or unreported income. If you receive payments in cash, Venmo, PayPal, or other digital platforms, those transactions are now reportable. Starting in 2024, payment platforms are required to send 1099-K forms for transactions over $600. The AI cross-references payment platform data with your reported income. The fix: report all income regardless of how it was paid. There is no legal threshold below which self-employment income becomes non-taxable. If you earned it, report it. Red flag number 7. Round numbers everywhere. This is the one most people don't know about. If every expense on your return is a round number, $500 for supplies, $1,000 for marketing, $2,000 for equipment, the AI flags it as statistically improbable. Real expenses don't come in perfect round numbers. The fix: keep actual receipts and report actual amounts. $487.32 for supplies looks real. $500 looks estimated. Let me give you a real example of how this plays out. A freelance photographer, we'll call him Marcus, filed his 2024 return with $72,000 in income and $51,000 in business expenses, a 70% expense ratio. He claimed 100% vehicle use, a home office, and equipment purchases, all legitimate, all real. 6 months later, he received an IRS correspondence audit, a letter requesting documentation for 3 specific items: his home office, his vehicle use, and his equipment purchases. Marcus had receipts for the equipment, he had photos of his home office, but he had no mileage log. He had estimated his vehicle use at 100% without documentation. The IRS disallowed his vehicle deduction entirely. That added $8,400 back to his taxable income hort, resulting in $2,100 in additional taxes plus $340 in penalties and interest. The audit wasn't triggered by fraud. It was triggered by statistical anomalies that the IRS system flagged automatically, and it cost him $2,440, entirely avoidable with a mileage log app that costs $6 per month. Let's bring this home. The average correspondence audit, the kind triggered by AI flags, results in $9,000 to $14,000 in additional taxes and penalties for self-employed filers who can't document their deductions. Here's your 7-point checklist before you file. 1. Your deductions are proportional to your income. 2. If you're showing a loss, you have documentation of business intent. 3. Your home office percentage is accurate and documented. 4. You have a mileage log for any vehicle deductions. 5. Your reported income matches all 1099s you received. 6. All digital payment income is included in your return. 7. Your expenses show actual amounts, not round estimates. If you can check all 7, you're in a significantly better position than most freelancers filing this year. The IRS audit process is documented in full on irs.gov. The link is in the description. If you want legal protection for your freelance business before the IRS comes knocking, Law Depot has LLC formation and contract templates specifically for independent contractors. Link is also in the description. Subscribe if this video was useful. Next week I'm covering LLC versus sole proprietor. Which structure actually saves more in taxes with real numbers? That's one of the most important financial decisions a freelancer can make, and most people get it wrong. This is Claws and Coin. See you next week.